All right, so I'm going to go over the four ways to get started investing in real estate. Now, when I say real estate, I'm talking about multifamily commercial level real estate. That's these big, beautiful 100, 200 unit apartment buildings. And I got people who ask, like, dude, how do I get started? Now, these are guys who actually have money in an account. Let's say you have 100,000, 200,000, $1 million in a bank, a savings account, retirement account, Fidelity, Merrill Lynch, wherever you have your money, right? So my thing is always the same. Number one, you can do it yourself. You can go out there. You can, if you're new, I would tell you this. If you have money and you're just getting started, educate yourself. Know what you want to do. The challenge with most people is they have money and they want to get started, and then they jump into it and they're like, dude, I didn't know it was this much work. One, I made a video before and I talked about it's like, how do you know you have a good deal? One, the location has to be sick. You got to understand the cash flow of that specific deal. You need to know the demographics. What are people paying? What are the houses selling for? You got to know the brokers. How do you write a deal up? Are you using a letter of intent? Do you go straight to purchase contract? What's your due diligence period? What is the time you need to close? Does the lender already want to fund the deal? What's the debt? How do you underwrite the debt? What is going to be the rate cap that you're going to use because you want to secure the right financing for that specific deal and the business plan you've got for that deal. So doing it yourself, yes, you can. But if you're just getting started and you want to invest money, man, there's a lot of work to doing that. So don't think that you're just going to be like, dude, I'm just going to go buy my own deal and cut my way through it. You need to educate yourself. That's huge, huge, huge. Because a lot of people will look at something online or they'll read a book or even take one of my courses and they're like, I'm gonna go do it myself. Like you need some education. I can help you, or somebody else can help you, whatever. But that's an option. Number two, joint venture. I've done all these, by the way, except REIT. So I've had to do it myself. So number two is if you're going to joint venture, you're going to take your money, you're going to give it with somebody who knows what they're doing. Now, if you're going to do that, that's the opportunity for you to do. You're going to do a smaller deal. You're going to do like a 10 unit, a 20 unit, maybe a 40 unit, and you guys want to partner on a deal, go for it. Find someone who knows what they're doing, right? All the stuff that I was just talking about and doing it yourself, find someone who knows how to do that, and then put your money with that person. Let them find the deal, you fund it, right? That's how I did it in the beginning. I got really good at finding the deals, underwriting the deals, dealing with banks, structuring the financing, lining all that stuff up and all of the negotiation, everything, all of it. Then I had a partner who invested money. Why did my partner invest? Probably like for you guys, he's like, dude, I make a lot of money in my business, or I make a lot of money in my job because he was an executive at Apple, and he's like, I'm just gonna pump all my money over to you because I don't want to do all that stuff. I'm way too busy for that. And then we split profit. So like this is another way. So if you have money and you're looking like, how do I get started investing? Where do I start? You can joint venture. You can find someone like me and just you and that person can do it, or you and maybe two other people. You guys can put in the money, the other person does the deal, right? That's a joint venture. Next, you can actually invest in a REIT, which a lot of sophisticated people like REITs, right? A REIT is not really investing in real estate. You're investing in the company that buys the real estate, and then the company sells its shares on Wall Street, right? So you can buy a bunch of Wall Street shares. The thing is that you don't own any property. You don't own any real estate. You don't you're not getting the tax benefits, the pass-through tax benefits of that, none of that other stuff. So you just own the shares of the company that has the real estate as its assets. Here's the difference. If the stock market goes down, the share price of that company comes down with it. So the value of your shares in that asset in the company in the REIT also has to come down. The dividends will get paid out, you'll get whatever, and you don't get the tax benefits of owning any real estate. So you're going to have to find other ways to write that off. You don't get a K1 and pass through depreciation that way. So there's the downside to doing it in a REIT, right? And then last but not least, which is where I sit right now, is syndicator or a fund. You can invest in the syndication or a fund. What a syndication or a fund is that you have a person like myself who's an operator. We put together the vehicle, right? We got to file with the SEC, get the SEC attorneys involved, draft the documents, make sure we're legit and legal, and then we can go and get money from investors, right? So I'm a general partner, you would be a limited partner, and that limited partner actually is still a partner in those deals. And then we take that money that we raise from our partners and we then go buy a deal with it and we all share in the profits, right? I'm the operator, I make sure the deal's doing what it's doing, and my partners, which would be the money partners, all that invested, they would actually get the benefit of the work that we do. Me putting together the company, my team, the investor relations team, the acquisitions team, the finance people that are on our team, the brokers, the management company that's on our team. You get the benefit of just investing. And oh, by the way, because you're an actual partner in the actual deal and the syndication of the fund, you get a K1. You're an actual owner in the actual property itself. So you get the tax benefits, you get the write-offs, you get all the benefits of being an owner, you get the cash flow with us, as well as when we exit those deals, we're looking for doubles and triples on the way out. So you get profit and your money back. So that's really the best way. So if you're looking to get started, you got money, you're like, dude, where do I start? These are the four ways you can get started investing. One, you can do it yourself. You can do it with a joint venture partner. You can invest your money in a REIT, or you can invest money in a syndication or a fund manager like myself, and you're a partner in those deals. This way, and it's not just because I'm biased, I just know 100% this is the best way. One, because if you're an investor in a fund or a syndication, you get to look underneath the hood of the car and go, hey man, how's things going? Because you're an actual partner, right? You don't get that in a REIT. You can be you can have a shareholder, you can do all that stuff, go to a ton of shareholders meetings, but you're not going to sit down with the main guy, the main decision maker, and find out what's happening. Just like you can't sit down with Warren Buffett. Period. He's going to be like, yeah, how many shares do you own? It's different. All right. So this is really how it works. It really is. There's no better way to get started other than investing your money in a syndication or a fund and knowing that. Now, here's the downside, I think, to a fund. There's a lot of people out there doing a fund of funds, meaning they're raising money as a fund and then they're taking all that money and they're saying, hey, I'm a part of this other company and I'm on the what's considered the GP side, the general partner side, but really they're not in there at all. They're in there because they brought your money to this table, but they're not really the people in the team. Like I personally don't like that. Why? Shit happens, man. Shit happens. And that person that took your money because they knew you gives that money to somebody else that they really don't know. And when something happens, it's like, hey, you knew the risk. That is a shitty way to do the deal. So I would tell people, me personally, invest with the fund manager that is the person over it rather than the fund manager that's going to give your money to somebody else and kind of be in the deal, but they're not really a part of that deal. Because most of those guys don't become fund that are doing funds of funds. They're not decision makers in the deals that they're in. They got allowed to be in the deal because they brought money to the deal, and they're like, fine, we'll give you a piece of it. But be honest with you, man, I personally don't like that. I really don't. Maybe later I'll change my mind because we'll have an ability to do fund of funds and we'll have people come on. But trust me, if somebody brought in their fund into my fund and I allowed that, which we don't right now, and I'm the main person, I'm going to do right by those people's people. I can't say that about everybody else, and neither can you. That's a scary thought. Give your money to somebody, they give it to somebody else that they don't know and you don't know. And then when shit hits the fan, they go, oh, I didn't know this guy. I can't believe he did that to us. No, you did that to us. Right? So you can tell that's a sore subject of mine because that situation gives good guys like myself that's doing the right thing with my investors and have been for decades, gives us a bad name. That's why people out there online go, oh, these guys take advantage of people. That's not true. One or two people that were uneducated took advantage of somebody else without explaining 100% to them, and then they got taken advantage of. Nobody just gets taken advantage of. Not in this business. This is real estate, right? And when you're regulated by the SEC and you're asking to go to jail, trust me, you should be doing the right thing, all right? So I hope this helps. I did this video 2 times. And the reason why is because I wanted to get really clear and dialed in for you guys so you understand. If you're going to get started, this is how you get started. My suggestion, you started in a fund or a syndication, and make sure it's the deal that you like, a deal that you want your money in. It's going to be 3, 5, 7, 10 years. Our deals are 7 to 10 years long. That's how long they're in. But that's better. If you're going to be a long-term investor and you really want to learn this business, stay in it for the long game. That's how this works. All right, so if you have questions, leave them in the comments. If you hate this video, good. Hate it. Give it a thumbs down. If you like this video, give it a thumbs up. Subscribe to the channel. I really just try to give you guys the best information I can because I'm a real guy. I'm doing this business for real. My goal, boom, is actively becoming a billionaire, but not just so I can become a billionaire. I want to make other people multi-millionaires with me in this real estate thing. I want to have the largest multifamily real estate fund in the United States, own the most multifamily units as one of the top players, the top 50. That's my goal in my lifetime for Bell Capital. And I want to do it. I can't do it without you guys because I want to help the everyday investor get into institutional quality assets on the West Coast. And I will do it, guys. I will. and I can't do it without you guys. So I'm looking forward to seeing you guys, having you guys. Go to bell-capital.com if you have questions. And let's talk soon. If you want me to make a specific video answering your specific question, leave it in the comments. I will make it. I read all the comments, we answer to those, and we make sure that we take care of the people that actually take care of us by watching, sharing, and commenting and liking. All right, so have a great night tonight. Get after it. Boom.